Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim, and happy July 4th.
Well, thank you. I've been sitting here working, trying to figure out what to talk about in cover in the letter. There's a lot going on, but then at the same time, there's not. It's kind of like this giant stalemate, and kind of in a holding pattern and waiting game, if you will.
How long can this money printing, quantitative easing, whatever you want to call it, going to continue? How long can it go on?
Until it doesn't. And I think I really think we're coming to an end of that. Look, we've talked about that, but that's how we got here. That's what created this. And every time the market tries to, correct or something, they come out with, great news, and they spin the news and game the market in every way they can, and with the quantitative easing and the interest rate cuts. And a lot of that, most of that is just gaming the market. Literally, it's just gaming the market. It's not truly, I know this sounds crazy, but I've looked at some studies by other people, and, I know just from looking at interest rates, it's just a matter of looking at it in a spreadsheet or overlaying a chart. The Fed follows the short-term rates that the market dictates. Just like back in 2018, the long end, it backstopped them when the 3-year cycles bottom. So ultimately, the market's going to backstop them. But in the interim, they can game it, and that's what's been happening. That's why this has been such a long and brutal process.
Tim, would it be smarter, cheaper, faster to just let the market ride where it wants to go instead of propping it up?
Absolutely. Look, let's digress for a minute and think about this. Just think about this logically. Everybody knows this if they think about it. This market, this has been going on for 20 years. The market, the organic top in the market, looking at it from, if you look at, for example, the job participation rate, you look at the M2, velocity of M2, you look at the volume characteristics, you look at a lot of different things. The organic top in our economy in the market was in 2000. And, of course, coming out of that 2002 low, they didn't have to do quite the things they had to do this time. Each time we've rolled over, the 2002 low, then the decline into the 2009 low, and then, each time they've had to take increasingly greater measures. And this last time we saw, someone said that and I didn't verify these numbers, but I heard someone talking about it. They said that the QE that they did in one day was more than what they did, during the whole time during the, coming out of the 2009, that 2010, 11, 12 period. So I don't know if that's true, but the point is that each time it's taking more and more and more to hold it. And in reality, if you look back, from my perspective, when you look back at the markets, if you would just let the market correct and get that purge, that washout, let the cycle express itself, then you're coming out of an organic bottom, and you're not fighting the market trying to hold it. It's real. And what we have now, that's how we've ended up where we're at. That's why it takes more and more and more each time to try to hold it, is because it's a bigger and bigger and bigger problem. It's a heavier burden to carry, if you will. And this rally coming out of out of the March low, it's held up. Obviously here we are in July now, and it's put everybody back to sleep. I talked to some people, just, ex-neighbors and just different people you bump into back when the market was down during that time frame, and they were crying, and like, man, if it'll just bounce back, if it'll just come back. Well, now what I'm hearing them say is, well, they're opening everything up and everything's good, and they're back asleep. And that optimism, it kind of feeds on itself, and it's just prolonged this process. And I guess what I'm saying is that nothing has changed. It's just a grueling process. The Dow theory, primary bearish trend change, is still intact. The longer term structural stuff from a cyclical perspective is still intact. Now, that said, what I'm watching, and where the kind of the little stalemate is, if you will, is that we have to now see structure. Everything is about structure. We have to see the structure now fall in place to cap this rally out of the March low. I don't know. We're at an opportunity, a window of opportunity cyclically where that top could come in here soon. And, it depends on what develops structurally. If it develops, it develops. If it doesn't, then okay, maybe it lasts a little longer. But it's that structure that's going to tell us, just like the structure did, we called it blow by blow back in January and February as that set up. And my suspicion is that as slow as the process is, once the setup occurs, it's going to occur rapidly, just like it did back in January and February. We saw it because we knew what we was looking for, and I think we're probably going to see the same sort of thing here. It's going to bada bing, bada boom. It's going to be on, and then, nobody's going to see it coming unless they knew what they were looking for. And again, that goes back to structure.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's going on with gold?
Hanging in there. Same thing. It is, we've been fighting with, if you will, I say fighting with, I guess I've been fighting with the 9-year cycle top in gold. It has tried and it won't give. It has tried and it won't give, but the data hasn't changed. And, I am convinced this is not a longer term breakout in gold. Yes, it's held on a hell of a lot longer than I thought that it would or could. We saw, the expectation has been that we got the bubble top in equities, that we got and that process is still underway, and we got the top in commodities, which we got, and crude oil would go lower, and that happened, so we're spot on there. But yes, gold has been the holdout, and I think that goes back to that optimism. People are convinced, gold, we're in this kind of uncertain period, and we got to go buy our gold because we're in that uncertain period, and gold is our safe haven, and that sort of thing. And it's just that optimism is just keeping gold, it's just lingering. But in reality, when I look at it, the cycles are what the cycles are. Gold is flirting with a 9-year cycle top. And it's trying to form. It'll try to bite. It doesn't. And then, as they say, the can get kicked down. I hate that saying. I don't even like using it, but it'll prolong. And then, it'll try to set up again, and it doesn't. And so we're back again at an opportunity for an intermediate term top in gold and for that longer term cycle to bite. And again, it comes back to the structure. Another thing we've talked about, and I want to remind you, is that another long-term, it's really not even, I hate to even call it analysis, but it's just another simple phenomena, is that if you look back, there are, kind of like the theory with Dow theory, you have non-confirmations at turn points and that sort of thing. And if you look back at like the industrial metals index, there are non-confirmations, warnings, if you will, at these major tops. Well, you look back at the 2011 top, and there's a screaming, non-confirmation there. I mean, that's just a phenomenon that you can't get past. It's real. It's there. And then you go back to the, other previous major turn points, tops. You look at another example is Newmont Mining. It had a major, not a major, but it was a non-confirmation with gold at the 2011 top. There was another one back in 87. Yes, at the 87 top. And I don't have the data quite far enough back, but I'm pretty sure there was a non-confirmation back at the 1980 top. So at these major turn points, you have these little indications, if you will, to tell you the environment that you're in. And then, of course, like I said, the structure will ultimately tell you when it bites and the setup is in place. But these non-confirmations are telling us that, yes, we're flirting with a major top in gold. And nothing has changed there. And I maintain that once we get the peak in equities and we get this next leg, begins, and the continuation of into the higher degree cycle lows is underway, that we're going to see a broader based, liquidation that's going to take, all asset classes with it, including gold, just like we saw in 2011. I think we're going to see the same sort of thing.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the outlook for oil?
Again, it's counter trend. The longer term structure in the commodity related indexes. When I say commodity related indexes, the Journal of Commerce data, the raw materials data, the CRB, everything tells us that the longer term cyclical structure is broken, and that these are counter trend bounces. And therefore, I think that it's a counter trend bounce in crude oil. Do we go back negative on crude oil as low as we did? That's going to be a hard hurdle to get under, if you will. But I do think that, it's hard to say it's counter trend if we don't go back to those levels. But I do think, what I'm trying to say is I do think that this is a bounce in oil and oil will turn down with everything else with the rest of the commodity complex, equities and gold.
Also, it's hard for oil to come back if people still aren't going to the office and the airlines aren't flying.
Exactly. And now here we have, all this stuff going on again. And, I don't see any way this economy is ever going to anytime soon going to return to any sort of normalcy. And then I remind you, and I know but I remind people that, the normal that we had back in 2019, that market, like I said, it was built on, it was cover. We talked about that being camouflage, that there was this huge disconnect between the underlying economy, which was already, again, the worst recovery since the Great Depression, and, looking at the hard data. But yet we had the high-flying equity markets that was, cover for all that. And now we have even a weaker economy. And it's not coming back like that. I mean, there's just no way. I mean, every day I hear about a business or some company that has filed bankruptcy, and I saw a little interview. I don't remember the names, but a guy just went down a list and just went on and on and on. And then, I drive down the road and I see restaurants here that, chains, some of them that are, I'm in a touristy area where people are here now, but I see restaurants that are closing. And so, there's just no way we're returning back to a normal, strong economy. I just don't see it. And yet I think that that's part of the optimism, is that people are hopeful, they're wishful, and then we have the market being gamed. And so I think this is kind of just, part of the relief rally from it being so oversold. And I think it's an opportunity to run for the hills, but I think few will take that opportunity.
Tim, thank you so much for being on the show, and have a great Independence Day.
Thank you very much.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.